Welcome. In this video, I'm backtesting this swing failure pattern trading strategy for 100 trades in a row. So let's cover what this strategy is and what's the difference between this strategy and my previous video testing swing failure pattern. So we are now changing the stop loss method. In this video I had uploaded 12 days ago, I tested this same strategy, but using a 1.5 ATR stop loss. In this test, I'm going to be just placing the stop loss at the swing high of our entry candle or the swing low of the entry candle, depending on the trend direction. So essentially, it's going to be a very close stop loss, and we're going to see how that affects the results here. And I can say that this one is much more promising than the previous one, as I'll cover more when I go over the results at the end. Now, before getting into the strategy indicators and showing you exactly what I'm testing with some examples, quick shout out to my affiliate exchange, Bitunix. If you guys want an exchange for trading crypto that doesn't require KYC or VPN, anyone in the world can use it, then check out Bitunix. I'd appreciate it if you use my affiliate link for this exchange or my other one, which is Bybit. I've been working with both these exchanges for a while, and they've both been really great. So let's talk about this strategy now. First, just with the indicators. So we have a 200 period exponential moving average for the trend filter. Rule number one, we're only taking long trades over the 200 EMA, only short trades under the 200 EMA, just like in my first test here. Everything is going to be the same as that first test, by the way, just the stop loss has been changed and the results are much better actually. So entry trigger, it's going to be our swing failure off of current highs or lows of the current pullback, depending on trend direction. Swing failure cannot be mid-range. It must be off the current extreme high or low of the pullback. So I'll show you some examples of that, but we're not entering a mid-range swing failure pattern. We're looking for a new high or a new low of the current pullback, depending on our trend direction. An entry will be skipped if the trigger candle already reaches new highs or lows of the current trend. So essentially a massive candle, if it ends up being our entry candle, our trigger, a valid trigger will actually be skipped if that candle already reaches a new higher low in the trend. So let's say we get a pullback. Let's say right here we had this pullback into the 200 EMA. We got a long right here, but that long candle, our trigger entry candle with swing failure pattern, closed all the way up here for a new high. We would not be entering that one. We only want to enter where we have a good tight stop loss and have a decent risk to reward ratio that's essentially reasonably likely to be hit. So if we get a huge stop loss, huge far away take profit target, we're just not going to be taking candles like that for entry triggers. Okay. So let's go over those swing failure pattern indicators. So we got swing failure pattern, SFP by Lux Algo here, TradingView, these are free. And then we have swing failure pattern by EMREKB, so EMREKB, that's the creator. These two are on my chart. We're going to be taking those as our swing failure pattern signals. I'm not going to be looking for swing failures that I can kind of eyeball. I'm just going to be taking the ones given by these two indicators to keep it fully just rules-based and not open for interpretation in any way. Okay, so that's what I used on this previous video as well. So let's just get into some of these signals, show some examples. So we're under the 200 EMA. We're looking for a swing failure pattern that's a bearish swing failure. So here's a valid entry right here. We get a pullback that starts at the lows here. So we're looking for a swing failure pattern off the highs of our current pullback. So here's a swing failure. That's an entry trigger. We go 1 to 2 risk to reward ratio, and our stop loss is just placed at that swing failure pattern candle wick high. Okay, so this one works out. And then we have another one here. This one that's in between these two, it's not valid because it's not off the highs of the current pullback. Okay, so this one we skip. We need it to be off new highs of the current pullback, plus this trade was already open, so we wouldn't have taken it anyway unless it got stopped out. So we go down, we make new lows, and then we actually start another pullback. So right here, go up. That candle ends up being a swing failure pattern. It's off the highest point. from where this pullback began, so it's valid. We put that entry in on the close, and stop loss goes to the swing failure patterns high, 1 to 2, and it works out this time. Okay, so those are some short trades. We don't have one there. Let's go to our last longs. So here's some longs. This one here, we had the pullback starting all the way up here, and we go down. We see that we get a swing failure pattern here. It's off the lowest point of the current pullback, so it's valid. And this one works out. We actually end up getting a huge move in the trade's favor. Great risk to reward ratio there. But here's the 1 to 2 right there. So quickly hits the profit target on that one. That's great. Then this one is a loss. So we come down to new lows of the pullback. We get a swing failure pattern there. That's a valid entry. And it doesn't end up working out. We come down to get stopped out. Okay. Get some more over here so we can see this one ends up being a winner. Swing failure off the lows of this current pullback over the 200 EMA. And as I will talk about later in the results, we're going to do another test here and try and capture some of these insane risk to reward ratios by doing some better trade management, which is very simple because we often get a very great opportunity off the majority of swing failures to get our stop loss to break even, but that's not for this test, but I will talk about that later in the results. We're going to do some more testing. As you can see, you get some crazy risk to reward ratios on these with this tight method of doing the stop loss. But anyway, this one does work out with the 1 to 2. We just take the profit there based on this test. This one's a loss. This one's a loss. So we take a couple losses there. This one was a loss as well. Let's see. Looks like this one was a loss. Got a win, a loss, win. So you guys can see it's so simple. I don't really need to explain it. It's swing failure patterns off the highs or lows of the current pullback based on trend direction. Here's another winner. But you can see here's another one of these where you just get these insane risk to reward ratios. This one as well, actually. So this one we get 1 to 18. This one ends up, just to range lows is 1 to 6, and then we go even farther, 1 to 13, 1 to 14. Some crazy risk to reward ratios that are possible here, even this one as well, 1 to 10, 1 to 12. So that's why I'll talk about that in the future. Here's another one that's a winner. Looks like this one was a loss. But yeah, you get the point. That's the strategy. Super simple. Time to get into the 100 back tests. Fast forwarded, then we'll talk about the results at the end. All right, the results are in, so let's take a look. This was tested on Bitcoin USDT, 15-minute time frame, using a 1 to 2 risk to reward ratio. Took about 3 months, 8 days for the 100 back-tested trades. And out of those, 52 were winners, 48 were losses. Most wins in a row was 5, most losses in a row was 6. So gain on the account, risking 1% equity per trade and not compounding. 56%, so performing better than the previous test by just a little. So it's about the same as far as these results go. But the biggest difference is the amount of time. You get more signals because with the wider stop loss, you miss a lot of signals using the other method with the 1.5 ATR stop loss. So this, you're going to get 2 months sooner to those 100 trade signals, making it essentially more profitable, more signals in a shorter period of time, but maintaining its profitability, if not performing better. So one thing I noticed with this was it could do a lot better with some trade management. So some of the trades will go 20R or 10R or 5R. But if you just go stop loss to break even after just 1 to 1, let's say you get a 1 to 1 and then you essentially go break even stop loss and try riding it out to a 3 or a 4R or a 5R or just to range lows or highs depending on the trend direction. You can get some crazy risk to reward ratios. I think it would make more money that way. Yes, there would be more stop outs at break even, but I think it would make more money than 56% over that series of trades that I just tested. So just this specific sample of testing, this is not conclusive by any means, but it's a good gauge of, is this strategy potentially viable? And I'd say, yeah, it performed really well. So we can look at this on the strategy ranking spreadsheet and compare it to the last one here. So 50% gain on account versus 56, it's barely different. We had 52% versus 50% win rate. But biggest thing, as I said, time difference, and also what I noticed about getting those just one-to-ones. Majority of these, even the losses, still go one-to-one. The vast majority I noticed went one-to-one in the trade's favor. So with that, you have an opportunity to go break even stop loss. Of course, this is only the second swing failure test. I started with a super simple method. This is also a super simple method. So I'll kind of ramp it up and try different things, add in some trade management, perhaps maybe do a 1 ATR stop loss with trade management. We'll see. There's so many different things that I can change about this, swing failure patterns being the core with trend direction, and then we look into the trade management, the stop loss placement, where we're going to take profit, range lows, raise highs, instead of just using this fixed 1 to 2. I think it could do a lot better. It did really well. I mean, we're at number 9 out of how many things have I tested? 104 strategies on this spreadsheet here. So putting it up to 9 with just such a simple method does go to show how effective swing failures are, getting a little move in your favor when you get a swing failure off of range lows or highs, depending on the trend direction, of course. So as we saw in my other test, also done really recently, that's actually number 2, this one right here. Number 2 on the strategy rankings spreadsheet was swing failure patterns, EMA, stochastic resets. So the difference there was not only did I include the stochastic reset, but also I had that variable stop loss with the break even stop loss. So it had a 45% win rate, but we had break evens on a lot of those and much better risk to reward ratios. So we came out with a much greater gain on the account figure. It did take longer for this specific test here, but we did have a better result overall. So that's, it's promising. Swing failure patterns, I mean, with these 3 tests I've done here just recently, definitely showing that they are very effective and valuable if used correctly. So there it is. Those are the results. Here's the strategy ranking spreadsheet. Thank you guys for watching. Don't forget, check out my affiliates for Bitunix Exchange or Bybit Exchange if you want to support me, and have a great trading exchange, specifically Bitunix Exchange. Check them out if you can't use most exchanges. They're allowing all customers globally, no KYC, no VPN needed on those guys. So thank you guys and have a great day.